What's up, YouTube? Welcome back to another episode of KJD Investor. This is yours truly, KJ. And without further ado, let's go ahead and hop into the portfolio. All right, guys, as you can see right here, we're looking at the investing account. We're sitting at $76,097.87. The market is closed. It's like 11:20 at night. And so here we go. A good time for us to kind of recap and see what's going on with the markets. You guys already know we are in earnings seasons. A lot of big tech companies are reporting earnings. And excuse me, for us, it's a double-edged sword because we are options traders and we are also long-term investors. So depending on how you look at it, depends on if today with the prices of the market and how the market has dropped, depends on if it's a blessing or not to you. But for me, it's always a blessing whether we're up, whether we're down. I make money in the market either way it go. All right, so the buying power right now is sitting at $4,487.94. And guys, I have been spending money out of this account. Like I said, the whole purpose of this portfolio, the whole purpose of this channel is to show you what I do to get to financial freedom so you can get your time back, your freedom back, choices back, be able to spend time with your family and friends and the people that means the most to you. So that's why I teach the kind of principles and concepts that I teach on this channel in order for you to free yourself up from that 9 to 5. You can do these trades working a 9 to 5, or you can do these trades without a 9 to 5. This portfolio, I built it up to generate enough income to be able to replace a full-time income for me. And that's been my goal for the last 19, 20 years. And that's where I'm at today. I'm finally able to kind of reap the rewards of my labor, so to speak. Okay, going on down, you see the option plays we got. We sat these positions in play back on, what was it? It was, like last week, 2 weeks ago? You guys remember when we were out here? Let me see. Let me click on one. We set these plays, okay, October 24th. And we saw these, and really all you got to do, I do monthly expirations. So really all we are doing is just checking up on the stock. We're checking up on the position. We riding these positions through earnings. Stocks go up, stocks go down. It's okay. You really don't have to do anything. Just kind of let it do what it do. And by the time we get to expiration, which is all my shares are expiring, all my options expiring November 21st, because I like to pick the same strike date. If you see, I pick the same expiration date for all my stocks, all my ECLs and stock options, because it's easier to remember that way. But they're all expiring on the same date. And like I said, really, I haven't been let down with the positions, man. All the positions, whether they these companies reported good, bad, or indifferent, and we still got more earnings to go. It's been good for my portfolio, I will say that, and we're making a good bit of money. And also, the most important thing we need to remember as option traders, is the premiums that we receive. And you might say, well, KJ, what you talking about? Well, the premiums are what we receive for being option sellers. The premium is what you pay when you are an option buyer. Now, I have implemented some buying strategies, which are leap options. Leap options are really the only buying strategies I implement. The example of one of those is right here, SoFi at $15 call. Right now, SoFi is at $29.48. The stock been doing good. SoFi reported earnings yesterday, and they absolutely smashed it. I mean, they absolutely killed it. But SoFi has taken a dip, just like the rest of the market, for the most part, has taken a dip. But SoFi has strong guidance. It beat on top line, beat on bottom line, EPS, expected price per share. SoFi beat on that. And also, this was the biggest quarter in company history that SoFi reported. So I believe the stock price is going to go back up. I do have a cover call on SoFi for $33 a share. So hopefully by my strike price, which is November 21st, SoFi is not $33 a share. So I don't mind that it's actually going back down to 29 right now, because as the days go by and we get closer and closer to my expiration date, As long as it's not surpassed my $33 strike price, I get to keep my shares and my collateral with the gain. The money that they paid me to sell the option is coming to me as well. Right here, I got my buying strategy. That's a leaps option. Those are the only buying strategies I do are leaps. I got 2 contracts, which lets me control 100 shares of SoFi. So whatever SoFi does in the long term, I'm able to control it right here through the leap option. Right now, I got a total return. I'm up $286. As you see, SoFi, like I said, the price of SoFi tanked today. And just like the rest of the market, and we lost $454, but it's not a real loss. Let me get that through to you. It's not a real loss because it's not a realized gain or loss yet because I haven't sold the position. Only when I sell this position back to the marketplace, back to a buyer, only time will I realize profit. So until then, I'm very confident that SoFi is going to go up and I'm going to make a lot of shares on this leaps. And that's what I mean by SoFi. Whether the price go up or down, I'm going to make money. So SoFi price is going down. I'm also selling puts right here. Where is it at? Right here, $26 puts. That means I'm betting that the stock goes down. 6 contracts, that's 600 shares. I'm up right now, total return, $276. That's a 40.35% return on the investment right now. I could cash that out and get 40%. But right here under history, you see where they're paying me for this contract, $684. And there's 6 contracts. I'm actually going to let this contract ride all the way to expiration because I don't mind owning SoFi at $26 a share. If SoFi ends up dropping all the way down to $26 a share, guys, I would be more than happy to pick up 600 more shares of the stock. I already got 500 shares and I'm controlling another 200. So really I'm working with 700 shares right now and I'm trying to pick up another 600 shares of the same stock. So I'm really bullish on SoFi. I really don't have nothing bad to say about it. I know people feel indifferent about it because of the earnings, but I think it's still a good company, a great company. They just reported the best earnings that they've ever had in company history. And I think it's only up from here. We're going to see, there's a lot of red in the market yesterday and today, but I think we're going to see a lot of green popping up, especially when we get into November, December. Those have been proven to be the best 2 months of the year when it comes to the stock market heading into that Christmas season. And I really don't, whether you celebrate the holidays or not, that's not what I'm talking about. I'm just saying, since it's Christmas season, it's going to be times where a lot of people spend a lot of money and a lot of companies going to make a lot of money. And so, people are going to be able to, those stock prices are going to go up because revenue is going to go up. And SoFi is a banking company. And so a lot of people are going to use banks, of course, and debit cards, credit cards to be able to pay for their goods and services. So I expect SoFi to increase in business and continue to grow, continue to estimated price per share earnings. I expect that to continue to meet and exceed expectations. And I expect SoFi to continue rising. So if SoFi go down, I'm making money. If SoFi go up, I'm making money. And if SoFi stays where it at, I'm going to make money because I got a $33 cover call right here. I'm up $290 overall. Today, I came back up $350 on my 5 contracts of the covered call. Now, covered call means you already own the stock as collateral. The stock is the collateral. I got 500 shares, so I got 5 contracts. And I'm making money, passive income off of those 5 contracts right now. As I said before, I'm up 46% in this one, $290 for these. And I got paid another $625 for selling covered calls against these 5 contracts. So SoFi has paid me handsomely, man. I'm not mad at them. Keep doing your thing. I'm just waiting around to get paid. That's all. Next, we got Sweet Greens right here. Sweet Greens. Earnings is actually coming up. The current price of Sweet Greens is $6.48. I'm up, and I got 4 contracts. That's 400 shares. I got cover call money going, passive income, cover call money. I'm going to, whatever stock I own, guys, I'm just going to put that out there. I'm going to run cover calls on any shares of stock. If they're in the increments of at least 100s, I'm going to make some passive income off of it. That's the whole point of the portfolio. I know some guys that I talk to personally, I'm just going to throw this in there. Some guys that I talk to personally, they only rely on premium income. They don't care about owning stocks, any stocks. I'm talking about the good companies, the mid companies, or the bad companies. They don't care about owning any companies. The only money they make is the money they make from the premiums. And they sell options every single week. Every single Friday, they options expire. And guess what? They collect their income, and their entire portfolio goes back to cash. The entire portfolio goes back to cash. So I do know investors like that. Me personally, I'm still in the phase where I like to be involved in the market, because I believe the market can give you some incredible returns even when you're not paying attention to it. And it's a good thing for your portfolio. You can end up taking profit off of a couple of stocks that it don't went up 5-6% since the last time you seen it, because you were just invested, then you reap the benefits from it. But, to each his own. And I got a dear friend who he just likes the premiums. And so, but he's raking in. Now I'm showing you guys how to rake in 5 to 10K a month through premiums. Now, the guy I know, he's raking in anywhere between 25 to 50,000, 55,000 a month in premiums. Now he's raking it in. And so, of course, he doesn't mind just having premium income. If you're making 50,000 a month, then I guess so, that makes sense. But right here, Sweet Greens, $120. I'm up in profit right now. I'm over 50% in profit. I could actually take this and run with it, and then redeploy some of this money back into another position with Sweet Greens. $212. I might actually do that, since I don't earn more than half of the position, half of the current price right now. So I may just go ahead and exercise that when the market opens back up, and I'll be able to sell another set of cover calls with Sweet Greens, collecting even more profit. Right now we got iBit, $64 cover calls. If you remember, the iBit was above 64. It was at 65. Now iBit, iShares iBit Trust ETF is back down to $61.81. And now this position is actually working in my favor. The cover call position, I got over 100 shares. I got 104 shares of iBit. Total return, I'm up 48% in a position. $130 is what we're looking at so far. And so, yeah, I could take profit, but I think I'm going to still let iBit ride. I may take profit on that one and then redeploy the cover call for the next 2 weeks and see how much more premium we can actually collect. The big boy, we got Archer, $10.50 cover call. At the time, I bet you guys like, man, you selling a cover call in the money. Why would you sell it in the money? Well, guys, I'm selling cover calls in the money because, one, it's more premium, and two, I don't care about losing the stock. I really don't. So I'm selling, because I'm selling this cover call in the money at $10.50, I received a premium payout of $1,304. $1,304, and that was for 8 different contracts, right? We're up in the position right now, about $288. That's 22%. Now, since then, Archer has exceeded over $11.50, and now it's back down to $11.08. Archer can continue to fall. It can even come down lower than the $10.50. And guess what? My cover call makes me look like a genius, because I hedge myself. When the stock begins to fall, I'm actually hedging myself with a cover call that was in the money when I first originally started this cover call. I started it in the money. Now I'm also selling puts on Archer. That was my $10.50 cover call. I'm turned right back around. I'm selling puts, $11 puts on Archer. Right now, Archer's at $11.08. So I'm not at risk of getting assigned just yet. But November 21st is the due date. But right now. It says I'm down $10 in the position. It's okay. 10 contracts. It's okay. Why is it okay? Because look at my Archer break-even price. Even though it's $11, they paid me $1,000. 10 contracts. That's 1,000 shares. They paid me $1 per share, and it took my strike price from $11 put down to $10. So Archer really just, if Archer comes down below $11, I would get assigned on these shares, but I would have a better price at $10 instead of 11. And look, right here, boom, they paid me $1,000 for this trade. So I just got paid over $13.04 for doing a covered call, in the money covered call for Archer. Then on the same stock, I got paid another $1,000 for selling cash secured puts. So that's what? That's $23.04 off of one stock in premium. In premium, that money hits your account as cash as soon as you make the trades. And, once you close the trades out and everything, I'm going to let those run all the way through because I want to collect the entire premium. And so once November 21st get here, November 22nd, I should, my portfolio should reflect the amount of money that's coming into the portfolio. Walmart cover call, $111. Walmart has dropped even more to $102. My cover call is looking like an amazing genius set it up. Total return, $100 even. I'm up on the position, 62.89%, 100 shares. They paid me $159 to do this trade, and I'm already up $100 of the $159. So really, guys, Walmart being dropping in price lately is helping me in my cover call. I could go ahead and take profits pretty early and then redeploy another strike price for that Walmart share. 100 shares I have a Walmart, and so I can continue getting paid even more money on the backside. So that's a lot of that's what's going on with my options. You guys already see it. I got some crypto, got some Doge, Ethereum, Avalanche. I got 115 shares of Walmart. I got a little bit of Starbucks. Starbucks earnings happened today. They missed earnings by they missed it. How much they missed it by? They missed it like 23% or something like that. It was something. The stock fell 1.15%. Starbucks, I don't even know why I still got Starbucks. I sold out of Starbucks a long time ago, but my portfolio held on to like a penny of it. And so it's just in there. That's all it is. I don't really post to have Starbucks, to be honest. Sirius Satellite Radio, they did earnings this morning. The only reason I got Sirius Satellite Radio is because it was the first stock I ever got when I got the portfolio. Robinhood gave it to me for free. And I've been thinking about selling it. I never put money in this stock. And so, it's crazy. It actually went up 9% in the portfolio. So that's good. Then I got my 400 shares of Sweet Green, 500 shares of SoFi, 104 shares of iBit, and 815 shares of Archer. And as you see, interest made this month, $17.84. Lifetime interest paid, $160.74. Cash earning interest right now is the $4,487.94. There you go. Look at this. Past month, realized profit and loss, $5,461.38. That's exactly what I'm talking about. So that's why I sell monthly options. That's why I do what I do. Selling monthly option trading monthly has provided me an income that surpassed a full-time job. A lot of you guys, a lot of people that's watching the videos, and a lot of people that's out here working these 9 to 5s, or just whatever shifts you work, they're not bringing in over $4,000 a month. A lot of them not even, and I'm up to 54 right now. This past month, guys, that's 32% return on my portfolio. I've brought home over $100, so $5,461 at 38 cents in the 1 month, and this is only from investments, not from a 9 to 5. I never made this much money on the job, to be honest, never have. So that's what's going on. Y'all see how it's going. The portfolio jumping. Traditional IRA, we're up $58,079.38. In the past week, we're up $3,126.45. Buying power $1,680.92. And with the option we got right here is for Robinhood. Robinhood position. Right now the price is 141. I sold puts at 130 for Robinhood, 2 contracts to 200 shares. And I actually don't mind getting Robinhood. And Robinhood dropped just like the rest of the market dropped. That's why you see that big negative on today's return, a negative $290. But I'm still so far ahead. I'm still up in the position, $88. So the 6.60% return, not bad. The premium is really why I did it. Right here, sell puts at 130, 2 contracts. Robinhood paid me $1,334, $1,334 on top of the other money I've been getting paid for selling options. So I'm gonna let this expire all the way out to, you know it, November 21st, 2025. So I can collect that full $1,334 from these Robinhood puts and continue to build up the traditional IRA account. As you see at the top as well, I got a Roth IRA. I don't have anything in it right now. I just started this portfolio. I just started this account with the Roth IRA. You guys are gonna see some money dropping there real soon. I got some more money. Like I told you guys, I had some more money in the Fidelity account, just growing, high interest account, just growing, investment account, just growing. And now what I'm finna do, at times and chances in the market, when I see opportunities to take advantage, I'm just going to drop it into the portfolio so I can start beginning to invest even more, trade even more, and bring home even more income. Bring home even more income. That's the name of the game for me. All right, you guys see investing account over 76,000, traditional IRA over 58,000. That thing has grown. That thing has grown. Let's take a look at the NVIDIA position. You guys already know about NVIDIA went bananas the other day. It's back down to $204.69. This is really what's credited to pushing my portfolio higher and higher. I got 115 shares on NVIDIA, and the total return, I'm up $10,901.99. It's changing, whatever. So I'm up over 10,000. Almost, like earlier, it was over $11,000. NVIDIA profit. And then Palantir at 197.21. Palantir has partnered with NVIDIA. They have earnings coming up in 2 more days. I believe Palantir continue to push up. I'm up in the position, over 90% return, almost $3,000 right there. I only got 31 shares of Palantir, but hey, it's a good play. I jumped in it when I jumped in it. I was able to ride the wave of the AI wave of Palantir, defense company. And then DEFT, y'all, got 1,000 shares of DeFi Technologies, $190 a share. I bought this at $2 a share. I should have took profit 2 days ago when I seen this thing up like $60 in profit. I should have took profit, but I didn't. And it's okay because guess what? It's gonna come back around. It's only down because the market's down today. But it's Powell, he cut interest rates by another 25 basis points. So guess what? All tech companies are finna get ready to go to the moon. You just had to give it time, guys. I guarantee you in the morning, it may just start. I don't know if it's going to start tomorrow, the next day, or whenever. But get ready. Get yourself in position. Get you some cash and put it in your account and get ready to buy you some assets because these stocks are finna go to the moon. And right now, my average price is $2. I got 1,000 shares. Once this thing get back to the $2 mark and then higher, I'm just waiting on it to go to $3, $4. Because look at the expected move. Q3, November 13th is earnings. I'm just trying to hold out. They're going from unprofitable to profitable. Anytime a new company does that and it has a great earnings, it pops. A lot of millionaires are made, and I'm trying to become one. And so there you go. Q3, the earnings are expected to be at 9-cent EPS. Hopefully this company does what it's expected to do. I bought 1,000 shares on the low end. It didn't cost me much. It's only 6% of the portfolio. Something speculative stock, taking a risk on it. I don't mind. It's a small risk. I don't mind small risks. I just don't want to risk it all. Risk it for the biscuit. You already know how I do. So yeah. I'm getting into retirement. I'm digging into retirement even more. So I'm not trying to risk everything, but I will give like a small percentage play of the portfolio to a play like that. Also, that's why I gave a small percentage of the portfolio to a leaps option. Like I said, that's my only buying strategy right here. The SoFi call for 200 share leap option. I only put in the market value right now is only $3,086. $3,086, yeah. And I'm sitting on six figures. I'm sitting on six figures right now. So I'm scaling this portfolio up to seven figures. I'm sitting on six figures, scaling it up to seven figures. So you guys already know how I go. This is KJ the Investor coming to you live. If you got any questions, comments, concerns, drop it down in the comment box below. And until next time, peace.